You're a Canadian parent navigating the world of life insurance. It can feel like a maze, but understanding the right type of policy for your family is crucial for their financial security. Today, we're going to break down the main types of life insurance available in Canada and help you decide which one works best for your family's unique needs. First, let's establish why life insurance is so important for families. If you or your partner were no longer around, what financial impact would that have on your loved ones? Life insurance is designed to replace lost income, cover debts like mortgages, fund your children's education, and ensure your family can maintain their standard of living without facing financial hardship. It's about providing a safety net and peace of mind. Now, let's dive into the two main categories of life insurance in Canada: term life insurance and permanent life insurance. Term life insurance, the affordable and flexible option. Think of term life insurance as temporary coverage. You buy it for a specific period, or term, which could be 10, 20, or even 30 years. It's designed to cover you during phases of your life when you have significant financial obligations. How it works: you pay fixed premiums for the chosen term. If you pass away within that term, your beneficiaries receive a tax-free lump sum payment. Once the term ends, your coverage expires, or you can renew it, often at a significantly higher premium due to your increased age. Many term policies also offer the option to convert to a permanent policy later without needing a new medical exam. Why it works for families: affordability. Term life insurance is generally the most budget-friendly option, especially for younger families. This allows you to get a larger amount of coverage for a lower monthly premium, which can be essential when you're balancing a mortgage, childcare costs, and other expenses. Targeted protection. It's perfect for covering specific financial milestones. For example, you might get a 20-year term to cover your mortgage until it's paid off, or a 25-year term to ensure your children's education costs are covered until they're financially independent. Flexibility. You can choose a term that aligns with your family's needs. As your life changes, say your kids finish university, your need for a large death benefit might decrease, and you can adjust your coverage accordingly. Considerations. The biggest drawback is that the coverage is temporary. If you outlive the term and still need coverage, renewing can become quite expensive. Permanent life insurance, lifelong protection and cash value. Permanent life insurance, as the name suggests, covers you for your entire life as long as premiums are paid. It's generally more expensive than term life, but it offers unique benefits, including a cash value component. The two main types are whole life and universal life. Whole life insurance, how it works. Whole life policies offer lifelong coverage with premiums that are typically guaranteed to remain level for your entire life. A portion of your premiums contributes to a cash value that grows on a tax-deferred basis. This cash value can be accessed later in life, either through loans or withdrawals, or it can be used to pay premiums. Why it works for families. Guaranteed coverage provides certainty that your family will receive a death benefit no matter when you pass away. This is valuable for long-term planning, leaving a legacy, or covering final expenses. Cash value growth. The cash value acts as a savings component. It can be a source of funds for emergencies, a child's education, or even retirement, without affecting the death benefit if structured correctly. Estate planning. It's a powerful tool for estate planning, helping to offset potential taxes upon death, or to leave a specific inheritance to your children or grandchildren. Universal life insurance, how it works. Universal life offers more flexibility than whole life. It also provides lifelong coverage and a cash value component, but you have more control over your premium payments and the investment choices within the cash value. You can often adjust your death benefit and premium payments within certain limits. Why it works for families. Customization. Ideal for families who want to combine insurance protection with a flexible investment component. You can tailor it to your evolving financial goals. Tax advantage savings. The cash value grows tax deferred, offering another avenue for long-term savings for your family's future, such as a child's business venture or a down payment on their first home. Considerations for permanent insurance. The higher premium cost is often the main barrier, especially for young families with tight budgets. The investment component in some permanent policies can also be complex. Which type works best for your Canadian family? There's no one-size-fits-all answer. The best insurance type for your family depends on several factors: your current financial obligations, high debt, mortgage loans. Term life insurance is often the go-to for covering these temporary but significant debts. You can align the term length with your mortgage payoff period. Young children. Term insurance can provide substantial coverage during their dependent years, ensuring their upbringing and education are funded if something happens to you. Your long-term goals. Lifelong coverage. If you want to ensure a death benefit is always there, perhaps for estate planning or to leave a legacy, permanent life insurance is the clear choice. Building wealth. If you're looking for a tax-advantaged savings vehicle within your policy, universal life or participating whole life policies with strong cash value growth might appeal to you. Your budget. Limited budget. Now, term life insurance allows you to get more coverage for less initially. It's a great starting point. Can afford higher premiums. If your budget allows, a permanent policy can provide long-term stability and benefits. Remember, premiums for permanent policies typically stay level, while term premiums increase upon renewal. Your health. Excellent health. You'll qualify for the best rates on both term and permanent policies. Getting permanent coverage early can lock in those low rates for life. Health concerns. While more limited, there are simplified or guaranteed issue policies available in Canada for those who might not qualify for traditional coverage. These usually have lower coverage limits and may have waiting periods. Can you have both? The laddering strategy. Many Canadian families find that a combination of term and permanent insurance offers the best solution. This is often called laddering. You might have a large term policy to cover your mortgage and children's dependency years, a smaller permanent policy for lifelong needs like final expenses or a legacy. This strategy gives you significant coverage when you need it most, at an affordable price, while also building long-term, lifelong protection. Don't forget about riders and joint policies. Riders. These are add-ons to your policy that can provide extra coverage or benefits. Common riders for families include Child Rider. Provides a small amount of coverage for your children, often convertible to their own policy later. Waiver of premium. Waives your premiums if you become totally disabled. Critical illness or disability riders. While separate policies are often recommended, some life insurance policies offer riders that pay out a benefit if you suffer a critical illness or become disabled, providing living benefits for your family. Joint policies. For couples, joint life insurance policies cover both partners. There are typically two types. Joint first to die. Pays out the death benefit on the first death, after which the policy ends. Joint last to die, or survivorship. Pays out the death benefit on the second death, often used for estate planning, or leaving a legacy to children or grandchildren, particularly to cover capital gains taxes when the second spouse passes. Final thoughts for Canadian families. Choosing the right life insurance is a deeply personal decision. It's about protecting the life you've built and ensuring your family's future, no matter what. Assess your needs. Start by clearly defining why you need life insurance and how much coverage you require. Consider all your debts, future expenses, and income replacement needs. Budget. Realistically, pick a policy you can comfortably maintain. A smaller, sustainable policy is always better than a large one that lapses because you can't afford it. Seek professional advice. The Canadian insurance market offers many options. Working with a licensed insurance advisor or broker who understands the Canadian landscape is invaluable. They can help you compare quotes from multiple providers, explain the fine print, and tailor a solution that fits your family's unique situation. Review regularly. Your life changes, and so should your insurance. Major life events like marriage, new children, buying a home, or career changes should prompt a review of your policy to ensure it still meets your evolving needs. Life insurance isn't just a product. It's a fundamental part of a robust financial plan for your family. By understanding your options and planning thoughtfully, you can secure peace of mind for yourself and those you love most.